Welcome to our deep dive into the future of cryptocurrencies. Over the past decade, digital currencies have evolved from niche technological experiments into major players in the global financial system. Today, we'll explore how cryptocurrencies are shaping economies, the opportunities they present, and the challenges that lie ahead. Whether you're a seasoned investor or just curious about the buzz, this journey will provide insights into the economic implications and hurdles of this digital revolution. Let's begin by understanding what cryptocurrencies are and why they matter so much in today's world. Cryptocurrencies are digital or virtual currencies that use cryptography for security. Unlike traditional money issued by governments, cryptocurrencies operate on decentralized networks often based on blockchain technology. This means transactions are recorded on a public ledger, making them transparent and secure. Bitcoin, the first and most well-known cryptocurrency, paved the way for thousands of others, each with unique features and purposes. Understanding these basics is crucial as we examine their growing influence on the global economy. Rise of digital assets has been nothing short of remarkable. In just a few years, cryptocurrencies have gone from being dismissed as a fad to being recognized as legitimate investment vehicles. Major companies now accept crypto payments, and institutional investors are entering the market. This shift signals a broader acceptance and integration of digital assets into mainstream finance, challenging traditional banking and payment systems. The rapid adoption is reshaping how we think about money and value. Cryptocurrencies are having a profound impact on economies worldwide. They offer new ways to transfer value, reduce transaction costs, and increase financial inclusion, especially in regions with limited access to traditional banking. However, their volatility and decentralized nature also pose risks to economic stability. Governments and central banks are closely monitoring these developments, weighing the benefits against potential threats to monetary policy and financial security. One of the core features of cryptocurrencies is decentralization. Unlike traditional currencies controlled by central banks, cryptocurrencies are managed by distributed networks of computers. This structure reduces the risk of single points of failure and censorship, empowering users with more control over their assets. Decentralization also fosters innovation, as developers around the world can contribute to open-source projects and create new financial products. At the heart of most cryptocurrencies lies blockchain technology. A blockchain is a digital ledger that records transactions in a secure, transparent, and immutable way. Each block contains a list of transactions, and once added, it cannot be altered. This technology not only underpins cryptocurrencies but is also being explored for use in supply chains, healthcare, and more. Its potential to revolutionize record-keeping and trust is immense. Cryptocurrency markets are known for their extreme volatility. Prices can soar or plummet within hours, driven by speculation, news events, and market sentiment. While this volatility attracts traders seeking quick profits, it also deters some investors and raises concerns about stability. Understanding the causes and consequences of these price swings is essential for anyone considering entering the crypto space. One of the most promising aspects of cryptocurrencies is their potential to promote financial inclusion. In many parts of the world, people lack access to banks or reliable financial services. Cryptocurrencies can bridge this gap by allowing anyone with a smartphone and internet connection to participate in the global economy. This opens up new opportunities for entrepreneurship and economic growth in underserved regions. Sending money across borders has traditionally been slow and expensive. Cryptocurrencies offer a faster, cheaper alternative, enabling near-instant transfers with minimal fees. This is particularly beneficial for migrant workers sending remittances home, as well as businesses engaged in international trade. As adoption grows, cross-border payments could become more efficient and accessible for everyone. Regulation remains one of the biggest challenges facing cryptocurrencies. Governments around the world are grappling with how to oversee these new assets without stifling innovation. Some countries have embraced crypto, while others have imposed strict bans or heavy restrictions. Striking the right balance between protecting consumers and fostering growth is a complex, ongoing process. Security is a critical issue in the world of cryptocurrencies. While blockchain technology is inherently secure, exchanges and wallets can be vulnerable to hacks and theft. High-profile breaches have resulted in significant losses for investors. As the industry matures, improving security measures and educating users about best practices will be essential to building trust and safeguarding assets. Environmental impact of cryptocurrencies, especially those using proof-of-work mining like Bitcoin, has sparked intense debate. Mining requires vast amounts of electricity, leading to concerns about carbon emissions and sustainability. Some projects are transitioning to more eco-friendly consensus mechanisms, but the industry faces pressure to address its environmental footprint as adoption grows. In response to the rise of cryptocurrencies, many central banks are exploring their own digital currencies, known as CBDCs. These government-backed digital assets aim to combine the benefits of crypto with the stability of traditional money. CBDCs could transform how we use and think about currency, but their development raises important questions about privacy, control, and the future of cash. Stablecoins are a special type of cryptocurrency designed to minimize price volatility by pegging their value to assets like the US dollar or gold. They offer the benefits of digital currencies while providing more stability, making them attractive for everyday transactions and as a bridge between traditional finance and crypto. However, questions remain about their regulation and long-term viability. Centralized finance, or DeFi, is an emerging sector within the crypto world. DeFi platforms use smart contracts to offer financial services like lending, borrowing, and trading without intermediaries. This opens up new possibilities for innovation and financial inclusion, but also introduces risks related to security, regulation, and complexity. DeFi is rapidly evolving and could reshape the financial landscape. Non-fungible tokens, or NFTs, have brought digital ownership to the forefront. Unlike cryptocurrencies, each NFT is unique and can represent art, music, or even virtual real estate. NFTs are creating new markets and opportunities for creators, but they also raise questions about value, copyright, and sustainability. Their impact on the digital economy is just beginning to unfold. Few countries have taken the bold step of recognizing cryptocurrencies as legal tender. This means businesses must accept them for goods and services just like traditional money. While this move can boost adoption and innovation, it also brings challenges related to volatility, infrastructure, and international relations. The world is watching these experiments closely. Taxation of cryptocurrencies is a complex and evolving issue. Different countries treat crypto assets in various ways, from property to currency. Investors and businesses must navigate a patchwork of rules regarding reporting, capital gains, and compliance. As governments refine their approaches, staying informed and compliant is more important than ever. Rise of cryptocurrencies poses new challenges for central banks and monetary policy. Decentralized digital assets can bypass traditional controls, making it harder for authorities to manage inflation, interest rates, and money supply. Policymakers are exploring ways to adapt, including developing their own digital currencies and updating regulatory frameworks. Unfortunately, the rapid growth of cryptocurrencies has attracted fraudsters and scammers. From Ponzi schemes to fake ICOs, investors must be vigilant. Education, regulation, and robust security practices are key to reducing risks and protecting users. As the industry matures, efforts to combat fraud are becoming more sophisticated. Privacy is a double-edged sword in the crypto world. While transactions can be more private than traditional banking, they are also recorded on public ledgers. Some cryptocurrencies focus on enhanced privacy features, but this can attract regulatory scrutiny. Balancing privacy with transparency and compliance remains a major challenge. Despite growing interest, several barriers hinder widespread crypto adoption. These include technical complexity, lack of user-friendly interfaces, and concerns about security and regulation. Overcoming these obstacles will require collaboration between developers, businesses, and policymakers to create safer, more accessible solutions. In developing economies, cryptocurrencies can offer solutions to long-standing financial challenges. They provide alternatives to unstable local currencies, enable cross-border trade, and support remittances. However, issues like internet access, education, and regulatory uncertainty must be addressed to realize their full potential. Some investors turn to cryptocurrencies as a hedge against inflation, especially in countries with unstable currencies. Digital assets like Bitcoin are often seen as digital gold due to their limited supply. While this strategy has gained popularity, it also comes with risks, as crypto prices can be highly volatile. Remittances are a lifeline for millions of families worldwide. Cryptocurrencies can make sending money home faster, cheaper, and more reliable. By bypassing traditional intermediaries, crypto remittances reduce fees and delays, putting more money in the hands of recipients. This innovation is transforming how people support loved ones across borders. E-commerce platforms are increasingly accepting cryptocurrencies as payment. This trend offers consumers more choices and can reduce transaction costs for merchants. However, price volatility and regulatory uncertainty remain challenges. As payment solutions improve, crypto could become a standard option for online shopping. Cryptocurrencies are increasingly being included in investment portfolios. Investors see them as a way to diversify and potentially achieve higher returns. However, the risks are significant, and experts recommend careful research and risk management. As the market matures, crypto could become a staple in diversified investment strategies. The crypto industry has sparked a wave of startups and innovation. Entrepreneurs are building new platforms, services, and applications that leverage blockchain technology. This dynamic environment attracts talent and investment, driving further growth and experimentation. The next big breakthrough could be just around the corner. Education is key to the responsible adoption of cryptocurrencies. As the technology evolves, users need to understand how to use, store, and protect their assets. Educational initiatives by governments, companies, and nonprofits are helping to bridge the knowledge gap and empower people to make informed decisions. Beyond finance, cryptocurrencies are being used for social impact. Charities and NGOs accept crypto donations, enabling faster and more transparent aid distribution. Blockchain can also improve supply chain transparency and fight corruption. These applications highlight the broader potential of crypto to drive positive change. The cryptocurrency industry, like much of tech, has been male-dominated. However, more women are entering the space as investors, developers, and leaders. Initiatives to promote diversity and inclusion are gaining traction, helping to create a more balanced and innovative industry for the future. Young people are among the most enthusiastic adopters of cryptocurrencies. They are drawn to the technology's potential for innovation and financial empowerment. Educational programs and youth-focused platforms are helping the next generation navigate the risks and opportunities of the crypto world. Cryptocurrencies are accelerating globalization by enabling seamless borderless transactions. This fosters international trade, investment, and collaboration. However, it also raises questions about regulation, taxation, and sovereignty as money moves more freely across borders. Cybersecurity is a top priority in the crypto space. As digital assets become more valuable, they attract sophisticated cyberattacks. Protecting wallets, exchanges, and personal data requires constant vigilance and innovation. Users must stay informed about best practices to keep their assets safe. Traditional banks are responding to the crypto revolution in different ways. Some are partnering with crypto companies while others are developing their own digital assets or services. This evolving relationship could reshape the financial industry, blending old and new approaches to money management. Traditional remittance services often charge high fees, especially for small transfers. Cryptocurrencies can dramatically reduce these costs, making it easier for people to send money to family and friends abroad. This benefit is especially important for low-income workers and developing economies. Smart contracts are self-executing agreements coded on the blockchain. They enable automated, trustless transactions without intermediaries. This technology is revolutionizing industries from finance to real estate, offering greater efficiency and transparency. As adoption grows, smart contracts could become a standard tool for business. Blockchain technology is being used to improve supply chain transparency and efficiency. By recording every step of a product's journey, companies can ensure authenticity and reduce fraud. This application of crypto technology has the potential to transform industries like food, pharmaceuticals, and luxury goods. Cryptocurrencies make microtransactions, very small payments, more feasible by reducing fees and processing times. This opens up new business models for content creators, app developers, and online services. Microtransactions could enable pay-per-use services and support new forms of digital commerce. Philanthropic organizations are embracing cryptocurrencies for donations. Crypto can make giving more transparent, efficient, and accessible, especially for international causes. Blockchain technology ensures that funds are tracked and used as intended, building trust between donors and recipients. Gaming industry is adopting cryptocurrencies for in-game purchases, rewards, and digital asset ownership. Players can earn, trade, and own unique items using blockchain technology. This integration is creating new opportunities for gamers and developers alike, blurring the lines between virtual and real-world economies. Artists are leveraging cryptocurrencies and NFTs to sell their work directly to collectors, bypassing traditional galleries. This democratizes the art market and allows creators to reach a global audience. Blockchain ensures authenticity and provenance, making digital art a growing segment of the creative economy. Healthcare providers are exploring blockchain for secure patient records, transparent billing, and efficient supply chains. Cryptocurrencies can also facilitate cross-border payments for medical services. These innovations promise to improve efficiency, security, and access in the healthcare sector. Future of cryptocurrencies is both exciting and uncertain. As technology advances and adoption grows, new opportunities and challenges will emerge. Collaboration between industry, regulators, and users will be key to unlocking the full potential of digital assets while managing risks. The journey is just beginning, and the coming years will shape the role of crypto in our global economy. Conclusion: cryptocurrencies are transforming the economic landscape, offering new possibilities for individuals, businesses, and societies. While challenges remain, the drive for innovation and inclusion continues to push the industry forward. By staying informed and adaptable, we can all play a part in shaping the future of money. Thank you for joining us on this exploration of the future of cryptocurrencies and their economic implications.